good? All right. Good morning, everyone. My name is Shannon McGriff, and I currently serve as the Executive Director of the Energy Professionals Association, also known as TEPA. TEPA was founded in 2005 as a not-for-profit business association to advance competitive energy markets across the country. Formed here in Texas and expanded to a national association in 2013. So we operate as a self-governing membership-based association with around 175 member companies, putting us around 13 to 14,000 members. So large group. We just had our national event like this last week in Austin, so I know the work that goes into planning these, and just want to thank the group for having me here today. I'm going to turn it over to my panelists to introduce themselves. Carol?
Thanks, Shannon. I'm Carol Haines. I am the head of power and policy for Core Scientific. For those of you that don't know us, Core Scientific is a publicly traded digital infrastructure company. We host Bitcoin mining, HPC, and AI clients and have locations in 6 states. My background before joining Core, I've been with the organization for 6 years. Prior to that, I spent 10 years at First Energy in various roles, leading our economic development organization there, as well as different roles on the deregulated side of the business, leading numerous sales channels, including our agent and broker business, as well as our small and mid-sized commercial business. And prior to that, always in the energy field and in multiple roles at different deregulated suppliers and energy companies. And I'm very happy to be here. Thanks, Shannon, for moderating, and happy to be with you, Scooter.
Thanks, Carol, and thank you also, Shannon, for stepping in. You did a great job last week at that. And again, yes, thank you to the Texas Blockchain Council for having us, for hosting. It's a wonderful venue. So I think really well done, and you know, hopefully everybody's having a great time. But yeah, Scooter Wormack, so Vega Energy Advisors, I'm a CEO and co-founder there, and we're on the energy brokerage advisory side, advising clients on multiple different topics that we're going to talk about today, both in the Bitcoin mining space and the new emerging, large data center, large HPC AI, load that's coming into Texas. We're primarily focused in Texas. This is kind of our home. This is where we feel most comfortable with the ISOs here, and ERCOT, and also SPP up in the Panhandle is getting a lot of new activity, and I think is fairly attractive to this new consumer set. So prior to this, was one of the co-owners and executive vice president of a small supplier here in Texas, and we focus primarily on commercial, industrial, oil and gas, Bitcoin mining, and that gave us a tremendous amount of experience on the wholesale side, all the way through to the retail side. And what really matters to these guys is they do site selection, as they structure energy contracts, as they come up and develop energy strategies for themselves, and then what impacts happen with the suppliers, with the QSCs, with the vendors, and everything there. So we just try to pull everything together, and I'm very excited to be here with you, Shannon, and with you, Carol, and let's have a good chat.
Awesome. All right, well, let's jump into it. We only have 30 minutes. So at the Bitcoin conference in Nashville, there was a lot of discussion about the concept of a mining mullet and the collaboration between mining and HPC. So Carol, what opportunities do you see for these different applications to come together?
I appreciate that. First of all, shout out to Nick Gates, who doesn't have his headphones on over there, but I believe he coined the phrase mining mullet, and it's just grown in the industry. I also have to mention that at Bitcoin Nashville, our CEO, Adam Sullivan, committed if BTC hit $100,000 by the end of the year that he would grow a mullet, and I believe he will be sporting a mullet for the holiday season as we get closer and closer.
Also, Nick's too cool to pay attention to any of this.
Apparently.
This is the best. You can say things and they can't even hear you.
He doesn't even know he's finally getting the credit he deserves. Anyway, to your question, Shannon, I think there's a lot that we have to learn about how the two industries and even data centers that will share both HPC and mining will come together. But off the top of my head, as we look at some of our experiences, we, Core Scientific, have been operating a relatively small data center for HPC since May in the Austin area. It's currently operating at 14 megawatts. And we've been paying a lot of attention to our load factor there and just the historical, data profile. All that's so new for the industry, but where I think there's going to be a great amount of opportunity is to plug old gen equipment into HPC facilities and use those miners to really kind of shave the peaks off to create higher load factors, have the utilities be excited about the fact that our load is more stable, there's not so much peakiness in there. It allows them to have more stability. And also with all the amazing equipment and technology and software that's been created, I see Foreman over there, we've got our own proprietary software, but the industry is ripe to be able to do that and align with HPC.
Yep. Yeah, no, I think it's really interesting because you're going to have such a confluence of software providers, hardware, firmware. You have to have everything come together to have this, co-location there with HPC and Bitcoin. And I mean, you nailed it. Effectively, kind of an ASIC retirement home, almost, if you want to think about it that way, to actually fill in those gaps, create better efficiencies in your demand charges, which is so often critically missed by miners specifically. But elevating that load factor, being able to combine these two things to have great power pricing, to have really efficient demand charges, and to have another place for these older gen machines to go. I mean, yeah, I think there's a ton of potential in there. It is going to be interesting how that works from, and you guys would know better than we would from your facility construction build out. Is there going to be room and space for these things to coexist from a facility standpoint?
Yeah, and I think that segues us really well into the next question, Scooter. How are the small and the mid-size Bitcoin miners going to compete for sites with the big AI and HPC companies in the competitive site process?
Yeah, I mean, I'll take a stab at this one first, but I think it's tough. I think may not be what everybody wants to hear, but it's difficult. You have these, amazingly large behemoth companies who have major balance sheets, a ton of cash, and they are trying to dominate, rightfully so, the future of our experience on Earth, right? And that's expensive. And it's oftentimes, more expensive than what we kind of classify a retail miner, a sub 20 megawatt type of client, type of customer. It makes it difficult because, frankly, like the checks aren't, you can't write as big of a check as they can, and that's an advantage. It's also a free market, and so we kind of have to, adjust accordingly. But I would say, if you're a miner out there, if you said something was too expensive to buy 6 months ago, and then 4 months ago, and 2 months ago, well, the price isn't going down. I hate to tell you. So I would say make a decision, move fast, and get hashing.
I think that's a great response. I do think it will be challenging, but I know from all the utility companies that we've got partnerships with already, and as we look for new sites, I think there will be opportunity. Crypto mining obviously has a different opportunity with the ability to curtail, and HPC is going to look at more uptime guarantees and firm load commitments. And so I think finding utility partners that are looking for that ability to curtail will be the niche for the small and mid-sized miners, where they may be looking at plans to grow their capacity and generation assets into the future, but they're not there yet. So making a commitment to a smaller mid-sized miner for 10, 20, 30 megawatts over the next 3 to 5 year period will actually be a unique opportunity for the utilities to bring more revenue in and just structure a deal where they know that they can curtail as needed.
Mutually beneficial. So how should the industry be thinking about baseload generation versus the renewable generation? And how does this shift with the HPC and the AI coming into the mix?
I think we probably all know that there will be that greater requirement for baseload generation across the United States. I read something recently where the EIA reported that they expect by 2040 there will be 400 to 600 megawatts of additional load online in the United States. And a lot of the utilities are planning for that. That generation won't come overnight. It'll come probably over the next, obviously, 3 to 10 plus years, and they've got to get into their capital planning cycles. I think Bitcoin mining has an interesting opportunity to bridge that gap, just like I sort of referenced in relation to being curtailable and having the ability to look to utility partners that have special curtailment programs. I'll use TVA as an example. TVA in the summer of this past summer rolled out a program called PowerFlex, and they're asking customers to sign up for a 5-year contract. And that contract allows customers to actually receive as much as a 1.3 cent per kilowatt hour discount on their energy rate for making curtailment commitments. And those commitments aren't, overly requirements related to that. It could be 300 hours or less a year. And that's really the part of their game plan, specifically TBA's, to figure out how to bridge their generation gap. When it comes to the HPC customers, I know utilities are meeting with us and talking with us about how we solve the problems together. And I think they're starting to think a little bit more outside of the box of maybe their traditional patterns of planning, where they're actually coming to the customers and asking us to solve the problem. So we've got a lot of utilities that are asking us, do we want to partner with them on future capacity purchases? Do we want to do any kind of co-location with new generation assets and things like that? And I think baseload generation is going to be so important that we, as an industry, both Bitcoin mining and HPC AI is going to have to partner with utilities in a new way than we have for planning and really to solve the capacity growth.
Yeah, and I would say I think it's a great opportunity for that collaboration. That's with IPPs, with utilities. I mean, you have, I think it's. I was thinking about it after yesterday, and it's like, okay, what's the story here? And I think it's Bitcoin mining really triggered, hey, we need transmission in a bad way, in a really bad way, right? Now, that doesn't necessarily kick off a fevered discussion about baseload generation because we need the transmission, but we can curtail, so we can kind of, operate and do the dance around pricing. That still requires major transmission upgrades. But what I think really, really nicely fills the gap with this higher firm load is it is going to kick off, I think, a renaissance, hopefully, of, hey, we need to get back to basics of having firm baseload generation for multiple reasons. But this, I think, could be the catalyst, again, not just in Texas, but domestically, to say, hey, if we're going to be the leaders of the world in this new space, we have to have the power to support it. And the only way that happens is, we love renewables, it fills the gap, but you gotta have some combined cycle, some nuclear. You gotta have some stuff that's really, really firm. I think it's a great, I think it's a great story, a great evolution of what is happening. It's made our grid operators really uncomfortable, but in the best way, because that's, otherwise we wouldn't grow, right? We wouldn't have that growth and evolve and make all the upgrades that we need, frankly, to be a world leader domestically in HPC, in Bitcoin mining, in everything that is our future.
Well, we've seen a lot of incentives on the renewable generation side, right? So do you, and I'm throwing this at you, this was not prepped. So
Curveball.
do you see any incentives coming in for the baseload? I mean, we've seen the Texas Energy Fund here in Texas. Any other markets you think will follow suit?
I know there are federal dollars for transmission upgrades that we are partnering with at least one of our utility partners to look at that as we expand one of our facilities. And I think we will likely see more of that come as we've talked to TVA as an example. They're going to aggressively pursue new nuclear. And they've said that they are going to be looking to the federal government to support them. I do believe that they recently received a grant to support 5,000 megawatts of new growth. And they said they believe that's just the tip of the iceberg.
I think it has to happen. I mean, yes, renewables have had their subsidies and their incentives, and wind and solar are fantastic. They're great, right? It's part of the world that we need. We need that additional seasonal capacity to meet our needs, but I do think it's probably time that shifts, right? Those incentives shift. I love the Texas Energy Fund, what they're doing. Basically, hey, if you want the funding, you need to overbuild to have a merchant position. And I think that's the type of, policy that we need, not just in Texas, but likely domestically across the country.
Okay, we can go back to script now. Sorry. What are the site selection differences between the mining and the HPC space? We kind of talked about them competing for space, but what are the differences in what they're looking for?
Do you want me to start?
Yeah.
All right. Obviously, we talked a little bit about the difference between interruptible load and firm load. That's one of the keys that we look at, and making sure that as we're looking for new sites, that a utility partner understands that we're not quite as flexible if we're looking for an HPC specific condition. In terms of land requirements, we need more acreage for things like backup generation, chillers. HPC and AI do come with more jobs than traditional mining facilities, and so there's got to be more space for offices and parking and all those things that come along with that. More water requirements for that, depending upon your chiller situation. We have a tendency to use closed loop chillers, so we don't have quite as much water consumption, but just making sure there is additional water available when the head count increases. We're hearing ratios like one full-time employee for every 1 megawatt operational in the HPC space. And in that event, you're going to have much larger offices than what we have today. The other piece of it is the diligence related to land and a location. Because the investments are so much greater, I think there will be longer diligence cycles to make sure that there is the workforce there to support that the land and the community is going to be supportive of a project, because the investments are so much greater. Where crypto mining investments were maybe $400,000 per megawatt, HPC investments are more like $10 million per megawatt. And so the infrastructure is there to stay, and the locations want to make sure that they site in places where the community wants them and is excited to support them into the future.
Yeah, I think because of the delta in the requirement space and all the things that you mentioned, right? I think what we'll eventually see, hopefully over the next year, is the HPC AI site selection won't have as much of an influence in the costs for capacity for some of the smaller miners. I'll kind of go back to it, and I think a lot of people are asking a lot of money for sites that probably wouldn't work for HPC AI, but they're kind of tagging along with that value. I do think that will kind of balance out a little bit, but yeah, I think both can coexist wonderfully, right? Because again, a 10, 20, 30, 50, 100 megawatt location, you're talking about massive, truly massive amounts of power in a really small space, totally different from what you guys are requiring. And I think they're just much smaller. I think they're going to be less expensive to acquire. Nick was explaining the water intensity required for HPC is totally different than mining. So I think you're going to have some more opportunities to find modular locations for Bitcoin mining as opposed to some of these larger installations. I do think those are the ones obviously that can have the best opportunity to convert if they want to, and the smaller miners are still going to have a place to survive because the requirements are not those hurdles are not nearly as high, for site selection for a miner, right? Kind of anything will do for a miner effectively if you got a few acres, right? And that's certainly not the case for the larger HPC data centers.
So to shift it kind of to the energy contract considerations for a conversion, perhaps. So if there's already a Bitcoin facility in operation and they're looking at the conversion to an HPC, what needs to be taken into consideration there?
I'll kick it off. They're totally different energy, contract structures, realistically, right? Much more akin to a 2 or a 3.9, level of reliability and uptime. You're going to have, maybe it's a block-in index, but maybe it's just a full requirements, right? And that can work as well. But it does invite some interesting questions about, how you do a power contract structure for firm load versus interruptible has a host of implications, right? Regarding tenor and volume, regarding credit and collateral requirements. There have been some great innovations in the Bitcoin space that I think maybe it's going to have a tougher time with this firm load, because you're talking about 5-10 year type of contracts. Those are hundreds of millions, if not more, notional dollars in a forward contract for physical power, and that really brings credit right back into the picture, right? So if you're not investment grade, you're going to have to get real creative, or have to maintain a ton of dollars to be able to post for collateral and credit, regardless of if you're in ERCOT or any ISO, right? Because it's just, hey, it's physical power, it costs money, it's going to require restructuring, different credit and collateral requirements. I think that's probably going to be the biggest impact. How you manage the load, I don't think is going to be nearly as impacted by what that contract obligation looks like.
I think we're seeing all of those things in real time as we work to convert our sites. We've made public announcements that we are contracted to convert 850 megawatts worth of active sites to 500 megawatts to HPC. And so one of the keys for, I think, our success in those projects is talking to our utility partners very early and often about what our plans are, and allowing for them to partner with us on this conversion. Everything from all the items Scooter mentioned in relation to the contract requirements and obligations, as well as allowing them to think about revenue loss in association with a period of time where a conversion happens, because a lot of times we're going to build on the same footprint, especially where there are land constraints. And so partnering with them so that they don't see huge hits to their revenue, and they can plan it into their forecasts and models, and make sure that they come out at the end of the day in a good spot. That even will enable them to think differently about their interim contracts, and then trying to be very dialed in as we go through construction and when we're going to bring a site back online, the ramp schedules. It makes me feel very similar to when we were first building our mining sites and how we were trying to partner, and now we know even more, and we know what an impact we have. And then when it comes to different size of utility, I mean, we've got everything from investor-owned utility partners that have much stronger balance sheets, to small municipal providers where we may be 50 to 60+% of their load. And we're talking to them about how we solve for future capacity obligations together, how we think about long-term contracts, like you mentioned, how we help them bring new capacity and generation assets in. And I think those conversations will continue to evolve, but it's really that partnership and collaboration that will be key.
Yeah, and it's interesting, maybe, there's different challenges, constraints, opportunities between a deregulated market in that space and a regulated market. Or, I mean, you have member base to consider, right? And you can certainly, especially in some of the more remote areas, more rural areas where there is more opportunity to build and grow and put these locations, it is really interesting. It's going to be interesting to see, like, you have an outsized amount of investment dollars relative to the population that is in the member base or served around. And that can potentially create some really cool opportunities for these rural areas of saying, hey, yes, you're 50, 60, probably sometimes more of that member base's revenue for the co-op. You're going to have massive investment dollars, and I think you can be really, really good community partners in providing value back to rural areas specifically that otherwise would have no chance at having that level of capital investment in their areas, right? For me, growing up in East Texas, there's really nothing there from a major industry standpoint. There used to be, but there's not. And I know that there's a lot of eyeballs over there. Same in a lot of these small towns in West Texas or South Texas. It is going to be interesting to see how that shakes out between the regulated markets and the deregulated markets, because ultimately the deregulated markets can handle more of this, and all those long-term power contracts, kind of positive feedback loop, incentivizes more generation, and I think it's just better. I mean, but it is going to be interesting to see how it breaks down between deregulated and regulated markets.
Do you have any experience on working? You work in both, right?
Yeah.
And so, do you agree with Scooter? Is it just a little bit easier and to work in the deregulated markets at times?
It's probably a little bit of a challenging question in that our only deregulated markets where we have customers is within ERCOT, and so ERCOT's its own animal, as I'm sure everyone in this room knows. I do think that's accurate. I think for us, I would say it's probably the experience is more specific to the type of utility and the size and scale. And so that partnership attitude of not just asking them to convert maybe our load from mining, which is interruptible, to firm load contract, or even going to them and asking for them to expand with us, is to really come at it from a partnership attitude, which is we recognize that there are challenges, we recognize that there are capacity constraints. How do we collaborate to solve the problem together rather than looking to them to just solve it for us? And I think there's a lot of creativity to come, and we're all going to learn and grow together, which is pretty exciting.
I don't know if the question can work in this room, but does anybody have any questions? I may be able to hear you and repeat them back for the panelists. Don't ask me any questions. All right. Well, join me in a round of applause for our panelists. Thank you guys very much.
Shannon.